we figured this is the movie. This is the, you guys are star performers, being the small business owners, and we're here to settle in for a night of free entertainment brought to you by the government, put together by us. Okay, obviously we give you the disclaimer tonight so that this presentation is general nature. Obviously there's Jobkeeper's evolving piece of legislation. We're trying to make every effort to make it accurate. So of course, if you need advice, we suggest you seek professional advice, because for some people it is a bit confusing. And there's certainly some certain things that will have a bit of a sting if you get it wrong. Okay, we'll move on to the next one. So let's just have a bit of a recap. Jobkeeper was announced as a stage 3 stimulus, and this has been the biggest event in tax history since the introduction of GST. So we've seen so much conversation, discussion, confusion over this. So I would say especially in the last 3 weeks, we've spent a hell of a lot of time just trying to understand what they're on about and trying to help you guys. Okay, from the 30th of March, the concept has been announced by ScoMo. There's been ongoing commentary and all the rest of it. Settle in for the premier event as we walk you through the history of what's called Jobkeeper. Okay, so on the 9th of April, Fair Work Act was amended to support the implementation and the operation of the Jobkeeper subsidy scheme in Australian workplaces. These changes are temporary and will end on the 28th of September 2020. Okay, so we've defined this in various areas. So we've looked at bits and pieces. So we're going to start off with the turnover test, and a lot of this is just going through rehash. So for most people are aware of this, but it's still worth a bit of a review. Employers, we'll worry about not-for-profits. Your small business has over a turnover less than $1 billion. All my clients do, and your turnover is likely to fall by 30% as compared to the same period last year. So we have a test period, which is either months or quarters between March and September 2020. And if you're on a cash basis, you can use cash or accruals. If you're on accruals basis, you use accruals. And obviously, for different people, there's certain methods that they can use. Okay, so we've got those that employ people, and we've got those which we call eligible business participants and sole traders. There's a couple of points here to note. So we're talking in this particular slide about eligible business participants, and these people can nominate one individual. So a sole trader can nominate an individual, a family trust, partnership, or a company can nominate only one individual. So that's better than what they announced 3 weeks ago, but obviously it's still discriminatory for those that have more than one person participating in their business from a family, or a series of directors. Okay, the business must also meet the decline in turnover test. So it's likely to fall by 30% or 50% if you're a large business. The business must have an ABN on or before the 12th of March. Okay, and it must have an amount included in its assessable income for 2019 and was included in their tax return lodged on or before the 12th of March. Now, we've obviously got extensions on lodgements, so in most cases people will qualify even though they haven't lodged their tax return through us. And they also got a made of supply. So it's not a matter of having an ABN, you've got to actually show that you're actually in business. Okay. Right, downturn, 30% for small business, get it right or pay price later. There's been a lot of commentary about getting the downturn right, and we'll go through a little bit of that now. If you do get it wrong, there is implications. If you manufacture something that's incorrect, there's also implications as well. So does a business have to meet the decline turnover on an ongoing basis? I think at first that was the opinion, but obviously as the legislation came out and over the last few weeks, things have changed. While a business must satisfy the decline in turnover test in order to be entitled to the Jobkeeper, there is no requirement to retest in later fortnights or months. So once you're in, you're in. As a result, if the business can demonstrate that turnover has been adversely impacted by at least 30%, then it will continue to meet that requirement, even if the turnover subsequently recovers. Note that the decline in turnover only needs to be satisfied once. However, we put a big warning: be careful of manufacturing a decline in turnover just to meet the 30% test. And you'll probably see a lot of that commentary in the next week as the government realises that a lot of people are trying to chase some free money. Okay, there is the alternative turnover test, because not every person is able to demonstrate that quite easily. And this actually only came out this afternoon. So they've applied what's called the alternative different approach for different classes of entities. So the new legislation instrument, they call it a legislation instrument, caters for the following situations: startup businesses, businesses which have experienced a disposal, acquisition or restructure, an entity which actually had a substantial increase in turnover before COVID-19 struck. So if you could show that you were doing fantastically well, or the previous year you had we had the election and quite a few clients probably weren't doing that well, and then you've done normal this year, we could probably use this as part of that sort of measurement. An entity with irregular turnover, sometimes you'll see some clients' turnover might start now and then it might be apples. They're making apples a couple of months ago and now they're not doing much at the moment. Or someone that's been impacted by injury or leave. So that may be where we would sit. So we have to, it's not a matter, we haven't seen how the Commissioner will apply that, but we do know that we'll have to give some evidence. So it's not a matter of just ticking a box in that case. We'll have to apply it to the Commissioner. But I think the Commissioner is pretty reasonable if there's good circumstances. So don't feel as though you're going to miss out if you feel legitimately that you're entitled to the Jobkeeper. Okay, so this is really important. We do have some clients out there or people that we know of and within my discussion groups that have mentioned that some taxpayers are looking to obviously manufacture a downturn. So I think it's important. For some clients, it's pretty obvious. For others, it's a little bit harder. And so that means that while you might tick the box and you'll start seeing the money, later on, believe me, the Commissioner, once everything's settled down and we're through all this, he'll start looking to how to recover some of that money. So he'll come knocking on your door and he won't give you much time. He'll say, okay, you applied for this, we've been watching you. We don't know if you're actually entitled to it. So you need that evidence on your file. So sales reductions, decrease in bookings, reduction in cash from customers. So they're looking for the genuine turnover reductions. Okay, now we're going to look at employees just quickly. So there's obviously a certain style of employee that's able to claim this. So once we know, we have a system here, is once we know that your turnover is okay, then we'll go to the next stage. There's no point trying to do the whole thing at once and get your employees excited if you don't meet the turnover. So we've assumed that our widget manufacturer has now met the turnover and he's looking at who or she can put it under the Jobkeeper scheme. So first of all, you look at employees that are employed by you. So including those that have been stood down or rehired. It does not include those that have been retrenched. So if you've retrenched someone, and you'll see this on all the sites, on the employment sites, it's up to you whether you take them back. It's not compulsory. Also, we then need to look if they're a permanent or part-time employee at the 1st of March. And then the other one is a long-term casual employee employed on a regular, systematic basis for at least 12 months from the 1st of March 2020, and they weren't an employee of any other employer. So I think that's where it's getting a little bit confusing, and we're still waiting for some direction on a couple of curly ones that we've got for various clients that are have seasonal employment. Obviously, these employees must be 16 years of age, so your paper boy or your younger girl that might be doing Macca's or whatever, they can't apply, or boy in the case. They must be Australian residents under the Social Security Act 1991. There is some exemptions for some visa holders, but not many. And of course, they weren't in receipt of Jobkeeper payments or government allowances, basically. And they agreed to be nominated, and they're not getting Jobkeeper elsewhere. So it's very important when you go through each of your employee nominations that you've really ticked off the box and make sure you're covered off on everything that needs to be covered off on. Okay, casual employee. Now, look, there isn't any real definition other than what the Commission has put out in its fact sheets. So we've got a casual employee is somebody that doesn't have to have a firm commitment in advance from the employer about how long they work or how many hours, but they're a casualty. So I think what I'm seeing is that this will shake up the employment law down the track, because it's also made people more aware of what their employer obligations. So an employee who works on a roster that could change each week and can refuse to work or can shift, change their shifts. So I've just put down a few definitions that we've picked up. Had no guarantees of work, normally irregular, doesn't get paid sick leave. So they're the ones that you just need to really go through and make sure that they've been there for the 12 months. It's not, we've had a couple of examples I've seen where comments have been made on the chat sites, oh, my employee was 3 days after the 1st of March. Sorry, that's not 12 months. So I think you'll find that's quite required, is quite needed to be done to satisfy that need. So really, with each casual employee, be very, very careful on making sure that you've actually ticked all those boxes. And I think the biggest one is that they don't have a permanent job somewhere else. So that's something that these have come out in the last couple of days, have been reclassified. So it's probably worth a look for each person. So I think what they're trying to do is say, well, if you've got a full-time job working for BHP and you also work for me, 5 hours a week, then really you have a permanent job somewhere else, and you may not be caught as a casual employee. So it's probably worth a review. Okay, you cannot claim employees that were not employed by you after the 1st of March, even if it's replacing one job with another. Resign your employment before the 1st of March, so they've resigned and they're gone. Have been or agreed to be nominated by another employer. And it's a systematic way. So these are just things that, again, are relatively straightforward, but can throw a few curveballs in certain circumstances. Now, this is probably just going back to participation. So I've just gone and realised that slides have gone back with the other one. But anyway, so this is really relevant for your directors and your trustee and trusts and partnerships. Obviously, it's not a given that you can just nominate a person. You've still got to go through the tests and make sure that they're actively engaged in the business. They're not entitled to JobKeeper payment from another business, and they're not a permanent employee of some other employer. And obviously they're above the age of 16. So in a lot of cases, we've got a lot of family trusts that are running businesses. Unfortunately, we're only going to be able to get one, not both husband and wife. But unfortunately, that's the rules, and that's just the way it's set out at the moment. So, okay, so what we've done, this is called the simple version. Just to quickly run through it, we're not going to go into too much depth. because you'll work through the process or we'll assist you with it. So we just said determine your business eligible with a downturn. So we've obviously gone through that. Determine which employees qualify. Continue to pay those employees $1,500 per fortnight. So we'll talk about that shortly. Register for Jobkeeper. Wait for the reimbursement of the ATO. Notify employees of your scheme. Report fortnightly or monthly to the ATO. I think it's now might have gone to monthly. Keep your payroll system up to date, and your system, you need to keep your payroll up to date to the last payroll date of 28th of September 2020. So the tax office is actually having a win here because they're getting everyone to use STP, and they're really going to be tracking what's going on. Okay. Timing for the first enrolment, so that's coming up at the end of next week. In order to be eligible for the Jobkeeper payment with respect to Jobkeeper, fortnight commencing 30th of March, the employer has until the 26th of April to register. So we're going through a lot of the clients at the moment, checking their turnover and assisting them to make sure their employees are right and then getting to be registered by that date. Whereas the fortnight Jobkeeper commences on the 11th of May, employers must register by the 24th of May. So if you don't meet this registration, it's not all lost. There's a conception out there by the public that we've got to meet this deadline. One, your turnover may not be correct for April. You still may have a reasonable turnover, and the client hasn't kicked into place, or you just may not be able to get all the employees across the line until the next one. And the other big thing is that you must have paid the wages for the registered employees for the period claimed, which is a minimum of $1,500 per fortnight for that month. Okay. Are employees required to continue to pay employees to qualify for the Jobkeeper payment? The answer is obviously yes. Employers are required to satisfy the wage condition in respect of an employee for the relevant Jobkeeper fortnight in order to qualify for Jobkeeper. The payment for the employee, as a reminder, the first Jobkeeper fortnight commences on the 30th of March and will end on the 12th of April. So that's the first one. So it's already been and gone. You need to, obviously, if you've reinstated employees, you need to go back and repay them. A payment under the scheme is meant to be a reimbursement to the employer of an amount already paid to the employee. So effectively, you're financing up front the first month of payments, and you're getting back from the tax office. Specifically, the wage condition requires the employer to pay each eligible participating employee at least $1,500 for Jobkeeper fortnight. And this can be represented by wages, pay-as-you-go withholding, salary sacrifice, super contribution, and other amounts. So it's obviously coming back to the definition of what's remuneration for employees. Okay, we've had a couple of questions around this, so I thought to throw this in. For those that have messed up their Jobkeeper application, you can contact the ATO on their fast key system, 111, and they'll get it rectified to you. Once you set up, make sure your accounting system can process the Jobkeeper payment via single tax payroll, and it's also make sure records easy and complete. And of course, for those using a manual system, they can lodge a paper report or they can ask us to assist you. So there is several ways. At the moment, we're just getting everyone registered. We'll obviously then worry about later on how the reporting goes over the next couple of months. Okay, so here's the system. You basically lodge on to the business portal using your MyGov ID. You don't fill out any paper forms. You select and manage the employees through the link to the Jobkeeper payment. You fill in the Jobkeeper enrolment form and provide your eligibility information, expected number of employees and the contact and the bank details. Very important to get the bank details there. You then notify your employees that you've obviously completed and they've filled out the forms, and you keep those forms. You don't send them off to the tax office. And then they go in and you sit there and wait on about the first week in May, and your money should come back to you. Okay, so here's the nitty-gritty summary. Jobkeeper payment is a wage subsidy. We've talked about that. Eligible employees registered to the scheme can receive the $1,500 per fortnight. So you've got to remember you've got to pay it to them. Under the scheme, eligible businesses will receive the per fortnight per employee. So, you know, if you've got 10 employees, that's $15,000 per fortnight. For the business participation test, it's only one eligible participant. So that's what we discussed. The subsidy will be paid for a maximum of 6 months, and it'll be paid in arrears. The JobKeeper will ensure that eligible employees receive a gross payment before tax of $1,500 per fortnight for the duration of the scheme, so that the employer is still liable for pay-as-you-go withholding. So that would net that they would take out, they would end up with a net of $1,308 in their pay packet. We have registered but not received confirmation that we're eligible for it. You should start paying $1,500 from the 30th of the 3rd to 20 onwards. So if you think you're registered, you think you're eligible, then you should start paying those wages to make sure that you you know, you're going to get it into the system, and they'll let you know that you passed. Okay, so obviously JobKeeper relates back to Fair Work, and so what they've done is payment on one side and fair work conditions on the other, because obviously most businesses are in a situation where they've had to reduce employees' hours, and so the government has said, well, we're going to have to relax some of the fair work laws. So it's only a temporary thing, and it's what they call employers have to give JobKeeper enabling directions. So I'm not going to go too much into the Fair Work Act because it's not my expertise, other than to say that there, in certain circumstances, employers can temporarily stand down an employee, including reducing hours or days. They can change the employee's usual duties. So we talked about that last week with the bananas and the apple pickers. We can change an employee's location of work. All this is all within reason. And they also mean that employees are able to make agreements with their employee to change their days, times of work and annual leave in certain circumstances. So of course, there's obviously the current affair stories going around where some of these employers have been absolutely mean or have taken this to their nth degree. You know, the poor kid that was only working 2 nights a week somewhere in a restaurant has now been told he's getting $1,500 a fortnight. So you've got to work, you know, 30 hours a week. That's not on. So there's obviously there'll be some certain cases coming along in the next couple of months, I'm sure. Okay, can employers select which of their eligible employees are covered by the job scheme? So we've had a few questions around this. No, all eligible employees must be offered. So the trick is here, once an employer decides to participate in the scheme, they must ensure that all eligible employees or who have agreed to be nominated for the scheme participate in this. So this applies to all those, whether they're working for you at the moment or you've stood them down. So if you've got an employee that says, oh no, look, I'm getting an allowance somewhere else, or I'm with another employer and I'm receiving JobKeeper through them, that's fine. You don't have to go through and offer them JobKeeper. But if they're entitled to it and you've enrolled for it, it's all in. So it's all in one, all basis, and employers can't pick and choose which eligible employees will be able to participate in the scheme. So it's very, very broad, but that's just the way it's a blanket across. And there's some winners and there's some losers in this scheme. Okay, are the JobKeeper payments from the ATO accessible income to the business? Yes. In the absence of any specific exemptions, the JobKeeper payments received by the ATO in the business will be accessible under Section 6.5, so basically ordinary income. However, there is, if you're an employer, so there's obviously different to the participation test, then obviously you're going to be paying wages back out to employees, which will give you an allowable deduction. So technically, it is a saving and money in, money out, so it cancels each other out. Okay, this is an interesting one about superannuation. There has been a little bit of confusion. So I thought I'd just throw this in. So let's work through this very carefully because it can confuse people. The government's intention is that employers will be required to make SGC contributions for amounts payable to an employee in respect of their actual employment. Okay, so that's where the terminology is. It's in their actual employment, which would not include any extra payments made by the employer to satisfy the 1,500 Jobkeeper payment wage condition. At the time of writing this, law hasn't been amended. I think it's now been fixed because I did this the other night. Okay, so here's an example. An employee ordinarily earns $1,000 a fortnight and is topped up by $500 to make the $1,500 a fortnight. The employer would be required to pay SGC in relation to the usual $1,000, but may lawfully decide not to pay SGC on the additional $500 payment, which is solely attributed to the Jobkeeper payments. In other words, in relation to the extra top-up amounts paid by the employee to the employee, it is up to the employer if they wish to pay superannuation on these amounts. But that's a bit of a confusion about people. There is another scenario which we'll go through in a second about casual employment. But basically, if I pay someone $500, I've got to pay 9.5% on $500. If I pay someone and then the $1,000, I don't have to pay 9.5%. I can if I choose. And of course, if I pay above the 1,500, well, it's just a reimbursement of Jobkeeper against my wages. Okay, so here's a couple of comments on accounting for the payment. Now, I'm obviously not going to sit here and go through every accounting system tonight. We're across most of the accounting systems, so give us a call if you get stuck, and one of my staff members will be able to assist you. Okay, so here's an example of what will happen in, I think this one's a mild one. You create a payroll category. It's called Jobkeeper Start First Fortnight number 1. And then obviously we're just putting 1 cent through, 1 cent withholding. So a bit like when they take your credit card sometimes. And that goes off the ATO. So that just says this person is now registered for STP through and is part of the Jobkeeper system. And the ATO can track that if they wish to. Then the second payroll, obviously unselect that. So you don't need to do it for that particular code. Where employees above the 1,500 per fortnight normal payroll procedures apply. So it's only really going to affect the next lot is for where we have to what we call a Jobkeeper top-up payment for the amount. So untick the SGC calc in the software, assuming the employer doesn't want to pay SGC on the top-up. And then, of course, if you've got a leaving employee, create a payroll category called Jobkeeper finish, obviously fortnight and the month or the week. So that'll become a bit more clear as mud when we work through that in the next couple of weeks. No doubt. I know the software companies have put various things together. We just have to make sure that we follow that. Okay. Cash flow management, big issue. We've seen a few employers struggle a bit with this. A couple, I think, are going to, I don't know what will happen. There's a lot of lobbying still going on with the government for some of these employers, that small business that might employ a lot of casuals. So if you can imagine you've got 20 casuals, it's a lot of money to stump up when you're really struggling, the doors are closed. At the moment, the government are adamant that you've got to go borrow the money. Banks are slowly coming on board with finance. Apparently there's some new finance options come out in the last day or two. First of all, the banks were very hard-nosed as to how they're going to help people, even though the government said that Big Four were supposed to be out there helping small business. They still had very stringent lending things that you had to follow through. So obviously you need to find that $1,500 per fortnight up front, otherwise you're not you're not going to make it. And you can't just say, oh, look, I'll get most of them and pick up the extra next month. You've got to pay everybody. Otherwise, you won't get the reimbursement from the tax office. And okay, it may not, you might get away with it, but if they do follow up with STP or whatever, they'll certainly find out what's going on. Okay, this is for the business participation and sole traders and the $1,500. So we're talking about non-employees. We've had quite a few questions as how that will be handled in their business. So if you're receiving the $1,500 per fortnight as a registered nominated individual, you don't need to pass the $1,500 on. It can stay in the business if you wish, or it can go out to the nominated person, or share it between 3 or 4 directors if that's the case. You don't need to register for a single tax payroll. And obviously it just becomes accessible income to the company or the trust or the partnership. Unlike an employee, there's no wage condition to be satisfied for an eligible business participant. So you get the $1,500 and you can choose what you do with that. However, I think you still have to satisfy that it is an eligible business participant. So that's the trick there. So there was a bit of confusion for sole traders as to how they treat it. It's just basically income, and you will be taxed on it like an employee would be. Okay, a warning from the ATO, change to wages, trying to add in more directors to the payroll than the one nominated individuals. So, so obviously we've got our widget company there. He's got 3 directors. They all choose just to get paid occasionally and take dividends. And then along comes Jobkeeper and they go, oh, we should be on wages. And so they put themselves onto wages. And then they've never been on wages before. And of course, the ATO will start to reinvestigate those where there's a restructure, or where they see last BAS there was, $20,000 pay as you go withholding, and then all of a sudden, oh, there's 40,000. So any change of out of characterization will obviously cause an investigation. So we're just got to be very, very careful that we're not changing things that weren't there before, or there's not good reason as to why they're doing it. So in the early days, it seemed okay, but it's become clear that that's definitely not possible. And obviously, as we go through with people, we'll make sure that's the case. If there's good reason for why they should have been on wages, then obviously we've got an explanation, but we've got to have clear reason why we put them on. And sometimes there is. Okay, so I just thought I'd throw this one in. The ATO stated they'll be actively reviewing entitlement. So how are they going to do that? They're going to look through single touch payroll. They're also going to look at their BASs, and they're going to combine a few things and put them into their big computer database and see what happens. If the ATO identify that you've entered into a scheme, you'll not receive the cash flow boost. You'll be required to repay overpaid amounts. You'll go to jail, not collect $200, and obviously they'll be going through some more compliance action, because once this is all over, obviously they're back in their job of collecting money for the government. Someone told me it's going to take 20, 40, 50 years for this to be repaid. It certainly will take a while. So I don't reckon tax cuts will be on the agenda. Okay, so subcontractors, we've had a few questions about this one. Subcontractors just in generally always seem to be a sticky conversation. The tax office, in their wisdom and in fairness to them, they would prefer more people on wages than being a subcontractor. So if you're, if a subcontractor satisfies the definition of employee but invoices for their services using an ABN, can the business apply for Jobkeeper assistance for that subcontractor? Okay. The subcontractor meets the definition of an eligible employee, then the business can apply for Jobkeeper assistance for the subcontractor. However, that's a big but, because I think what it's coming down to, there's no definition for an employee under the Jobkeeper rules, but what they're basically saying is, why wasn't this guy or lady an employee in the first place, and why weren't you taking pay-as-you-go withholding out of it? So I think I've told most of my clients, if they've got an ABN and they're for whatever reason invoicing you that way, then they should be seeking their own Jobkeeper as a sole trader or however they're trading. You probably don't need to take on something that may be rejected, because obviously if they're rejected, you're going to have to pay back the money, subcontractor. Okay, so now what we've got, this is only halfway through, we've got a whole lot of questions that we've come up with. We're going to run through these relatively quickly. These are the questions, they're not the standard questions that we've had. These are the questions that make everyone think and scratch their head and think, well, I wonder how we treat that. Some of these are our clients' questions. Some of these I've picked up from various seminars and things that I've been to. And of course, there's still more clarity coming. But look, let's go through them and see. You might be able to relate to some of these. I certainly, it's made us think here. We've obviously had lots of discussions as things go by, and I know I've had lots of discussions with various clients, including probably most of you guys that are on here tonight. Okay, I've just started my business up. Okay, probably not the best time in life to start a business. This person makes widgets, and they started their business in November 2019. How do they work out the decline in turnover test? The business, Margot's just arrived. Hello, Margot. Thanks for joining us. The business will have to rely on an alternative decline in turnover test and will be regulated by the Commissioner of Taxation. So they'll have to demonstrate a decline in sales as a result of COVID-19. See us if that's you, because we'll have to work out a method and a way of calculating a practical way to show the Commissioner that there has been a decline in turnover. So it's not all lost, but it's going to be a lot harder than the guy that lodged his BASIS or lady that's lodged his BASIS for the last 2 or 3 years and can show a definite turnover decline. So that one's an interesting question, and we wait to see if there's any more coming from the Commissioner in guidance in that area. Okay. What happens when my employee leaves? Obviously notify the ATO in the next round of reporting to avoid overpayments. Otherwise you, the employer, will have to pay it back. That's a pretty obvious one. Why would an employee leave if she's on Jobkeeper? He may be offered a full-time job somewhere else, or retired, or you've retrenched them, whatever the case may be. So just bear that in mind, that that's part of your reporting, is to make sure that you're regularly checking your employees. Okay. An employee, is it true if you normally earn less than $1,500, you're effectively getting a pay rise? Yes, if your employee is on, and you're on the Jobkeeper payment, then you'll get, ATO is guaranteeing a minimum of $1,500, so you'll be getting a pay rise on the Jobkeeper period. The employee is not obligated in this case to do more than their normal hours and what they're paid for by you. Be careful, don't fall foul of the Fair Work Australia. So, you know, if they're normally working for you for 10 hours a week and they're getting paid $200 or $300, and they're now getting this large amount, well, that's just a top up for them, and lucky them. Okay, an employee takes annual leave. If an employee takes annual leave and they're receiving Jobkeeper payment, it will come from their annual leave entitlement as normal. So the Jobkeeper payments for the employer as normal will be received. The standard rules will apply in relation to Jobkeeper payment, in that the employee must be paid at least the $1,500 Jobkeeper payment, or the actual wages they are entitled to for that fortnight as leave, whichever is the greater. In addition, the superannuation must be paid as usual on the annual leave payments and the time worked, but not on any top-up Jobkeeper payment. So obviously if there's less, annual leave payment exceeds $1,500, if the payment for that is the employee is entitled to receive the annual leave exceeds $1,500 in Jobkeeper, then you will need to pay the employee the full amount if they're entitled to that as that part of their annual leave. So obviously Jobkeeper just subsidises their annual leave in that case. As an example, if an employee takes 10 days of annual leave and entitled to $2,000 for that period, you'll need to pay the employee $2,000, which includes $1,500 Jobkeeper payment, as well as the SGC on that case. Can an employee be forced to take annual leave? Again, this is getting into the fair work area. Those on annual leave receiving Jobkeeper payment for an employee, employer can request the employee takes annual leave as long as the annual leave will not result in reducing the employee's annual leave balance below 2 weeks. Obviously, this overrides conditions set out in a fair work instrument such as a modern award or a contract of employment. The employee cannot unnecessarily refuse this request. If the employee does not agree to your request, you can apply the Fair Work Commission to settle the dispute. Does the employee accrue entitlements when they are on Jobkeeper enabling direction? Yes, of course. If you're given the employer direction under Fair Work enabled direction provisions, will they continue to accrue entitlements as normal, which is annual leave and personal leave? Yes. And the period they are subject to direction will also be counted as service for purposes of termination and redundancy pay. Obviously, Matthew, who's on board tonight, a lawyer, would know that better than probably myself. Jobkeeper and other work. So this is still a little bit grey as to what is still case, but basically it appears that it's possible for to seek other casual employment while on the Jobkeeper, provided that it isn't impacting on the primary employment, e.g. if stood down but asked to come back, then they must complete work up to the $1,500 payment. So there is a bit of, not confusion, but there's some employees think that they're getting the $1,500 that they don't have to work for it. If there's work to be done, then obviously the employee has been stood down, then the employee may be asked to come back to help with the work. Because this is called Jobkeeper, it's not called Job Seeker. So there is no minimum amount of casual work or maximum amount. There's nothing that says in the legislation as to how much they can earn while on Jobkeeper. If it is a new employment, it's a full-time role, then obviously the employee cannot continue to receive Jobkeeper because obviously they've gone back to full-time employment somewhere. And a casual cannot receive more than one Jobkeeper from employers. So we're just got to watch all that because obviously Jobkeeper is important, but we've got to make sure that people aren't actually getting it twice and not using it for what it's there for. Can my employee take twice as much annual leave on half pay? Yep. So basically, you can spread out the, if it's agreed by the employee, you can spread out the leave over that period. So basically stretching out, and the Jobkeeper payment will be able to supplement that. If you need help on that one, give us a yell, we can work through that. Okay. Can I claim the Jobkeeper payment and supporting apprentice trainees at the same time? We've been asked this question a number of times this week. No, it's been pretty adamant from day one. You either get one or the other. By now, if you've got apprentices, then you must have you've probably been contacted by the apprentice board or whoever's looking after the apprentice, and they should be receiving They should be receiving the apprentice training amount. And in a lot of cases, if you're paying above the award, they'll still pay it, apparently. So they'd be not one of your eligible employees. So they won't actually get a government subsidy for the apprentice. So you won't get the Jobkeeper payment, but you'll get the wage subsidy for the apprentice. So sorry about that confusion. Okay, husband and wife. We do have a few clients that have husband and wife running their own separate businesses. So if it's combined in the one family trust, which we have a few there, only one eligible employee. But if you have a husband and wife running as sole traders or separate companies, the fact is that each of them can get their own Jobkeeper. So if mum is not an employee of the business and dad is not an employee of the business, they'll overclaim Jobkeeper payments in relation to their own business for themselves, providing they've met the other conditions, which is an ABN, trading, and all the rest of it. So it's coming back to proving that you're actually running your own business. Okay. Employees that have stood down. If an employer has useful work for you to perform, the stand down period would end. So if an employee needs to come back to work, then you can have them come back. You can pay them the $1,500. Obviously, if they're on, $100 an hour, they only work for you 15 hours. $50 an hour, that would make it 15 hours per fortnight. So you can't actually have them, as we discussed before, doing them more than what they would be for the hourly rate for the $1,500, unless they agree to. Or you can reinstate and have the employee perform work that is based on the hourly rate, and you can have them doing other stuff as opposed to doing what they would normally do if that's what is required to be done, providing obviously it's within reason. Okay, so the test month. If a business decides to register in May instead of April and only wants to receive the Jobkeeper payments from, say, the 15th of May instead of the 1st of April, does the ATO look back to see if they received the $1,500 per fortnight from the 1st of April, or just from the time the business is registered, e.g. the 15th of May? So in that case, we've decided that April's been okay. We're now looking at May. Then we take on the May one, and we say you only need to make sure the $1,500 per fortnight is actually paid for that month. So you don't have to go back and say, oh, I sort of missed a couple in April, because we're only looking at that particular month. I think, just thinking out aloud, I'm not sure what would happen on a quarterly basis, whether you'd have to show that whole, I would say you'd have to show the whole quarter of payments. We'll have to check up on that. So you can see there is also a little bit of confusion. And obviously, as we work through this, there's a few things going in my mind that we'll need to clarify. And some of that will come out. Okay, if my business goes into administration, unfortunately, there will be some businesses that will go into liquidation and administration. The difference, as Con told us last week, administration is where someone like Con would come in and run your business until they decide that it's okay to hand back to you, or it goes into liquidation, which means it dies. If it's in administration, your employees will continue to be paid. If, however, your position is made redundant or the business is wound up, obviously you're no longer employed, or your employees are no longer employed, and they don't receive Jobkeeper. And then that's where they say Jobseeker is the alternative to that. So we're actually, we've had a few people ask what they do with their employees that are not eligible. I think it's very smart by the tax office or the government to say, you guys admitted to the scheme. You have to have that hard discussion, because ultimately if they're not eligible and you put them on, you're responsible for them. So what we're suggesting is that you basically be upfront with them, and if they're not eligible, you send them back to the Centrelink scheme and Jobseeker as opposed to Jobkeeper, and they will obviously, Jobseeker will assist if possible. Now, Jobseeker is means tested. I can't remember how hard it is means tested, but in some cases there'll be a bit of pressure put on you to make sure that an employee, or by the employee, that they can receive Jobkeeper rather than Jobseeker if their partner is already earning a good wage. So it's your decision as to whether you go on Jobkeeper. Once you decide to go on Jobkeeper, it's then your obligation to offer it to all your employees that are eligible. So I think that's the best way to think about the system. Okay, that pretty much concludes all of what we're going to talk about for Jobseeker tonight. Though I will open up for general questions. I don't really want to take specifics. However, in a minute, I will ask Matthew to give us an update on what's happened today in relation to the Victorian government. They've passed their law in relation to commercial leases. So in a minute, I'll ask Matthew to have a few words with us. Obviously, we're getting close to the end of Keeper, thank goodness. We probably won't be having these regular Thursday night catch-ups on Jobkeeper. Obviously, while COVID-19 and we're all stuck at home, we're going to look at other activities that we can do. So I'm going to put a revised schedule because there's certain things that we need to do post COVID-19 to get our businesses back up and running and life gets back to normal. We're going to hold in May, probably mid-May, a Zoom client conference. We'll go for about 2 or 3 hours on a Friday morning. Start about 8:30, finish about 11:30, 12. I'm looking for some interesting speakers. So if anyone wants to speak at my conference, come along. We're looking at website development. We're looking at HR issues. We're looking at the vision for your business so that we can help you redevelop and refocus your business so that you guys come out of it all. Of course, glad to tell you our phones are back to normal. Thank you to Brian. Very much recommend Brian if you need a hand with your telephone system because he's untangled our mess and we're now working out how much money we can get back from Telstra to see for the overpayment that we've had. Of course, you can keep in contact by subscribing to our newsletter, looking at our website, Gartly Advisory, for our blogs, following us on Facebook, booking an appointment with Michelle on Zoom so that obviously everyone's getting used to Zoom. I think it's good in the fact that it's quick, easy. We can still have a face-to-face conversation. The only thing is we can't have is a meal or a coffee. So hopefully that will change over time. Finally, before I open the floor and I ask Matthew, I just want to thank everyone for their support. We've got quite a few on board tonight, and that's fantastic. We've got a few on Facebook Live. We're feeling the love. We're finding it hard like everyone else. The disruption's never easy. We obviously haven't done as much work as what we'd like this month. Every day we spend a good half day talking about Stimulus 1, 2 and Jobkeeper. But I want to thank everyone for their support to us. And it's comforting to know that we've got great clients and we're all working through to the end of this so that we can all get out and get our lives back to normal, and especially our businesses. I've seen some really good businesses come to a grinding halt, and it's heartbreaking for people that through no fault of their own, they've ended up in this situation. And I want to see people get back to what they enjoy doing. I mean, we're all in business for a good reason. And part of the good reason is to enjoy our passion of what we do, and obviously to make wealth for our family and to have a good life. Going overseas holidays when one day we're allowed to do that, it's hard to envisage that at the moment. But obviously, thank you for listening to our Jobkeeper update. Hopefully we've given you enough. Maybe we've probably given you more questions than answers, hopefully. Maybe it's the other way around, hopefully. We think if you're registered, it's now coming to the nitty-gritty of making sure that you're doing everything possible for the next couple of months to keep the government happy in terms of the registrations and the ongoing reporting. If you haven't registered because your turnover is too high or you haven't had that downturn yet, then we suggest that you obviously continue to monitor that. If you're not quite sure on if you meet that, obviously we're working through a number of people at the moment. We've got files everywhere working through people's issues on that. By all means, reach out. The more we seem to be doing, the more we understand the process. This is new to us as it is for you guys. So now what I want to do, just before I open it up, I'm just going to get Matthew to come on board.